Hello guys, I'm Lubomir Valik. I'm teacher of a university class, Bitcoin and Blockchain. And today we are live on a discussion with our guest, Bitcoin-focused economist and newly also Trezor ambassador Josef Tětek. And the discussion is part of our practical seminar, Bitcoin and Blockchain, that is led on a University of Economics, Faculty of International Relations. And we will be streaming actually several these discussions with few experts from crypto industry. So check our later streams as well. And now I am passing the mic to our moderating team that is pre-selected from our students. And I can already see them here in our Teams class meeting, but due to GDPR regulation, we are streaming or maybe capturing only my account and as a teacher and account of our guest Josef Tětek. So Josef will be able to see rest of the class, but you will see only two of us. So guys, floors is yours.
Hello everyone. Hi.
So hello once again. Allow me to welcome all of you here. We have today a very special guest who is Bitcoin researcher, analyst, and publicist, Josef Tětek. Welcome. Thank you for joining us.
Thanks. Thanks for the invite.
So my first question to you is, you are working at Topmonks, as I said, as a Bitcoin researcher. And suppose that somebody would like to apply for the same job that you have. What does the job look like on a daily basis?
So one minor confirmation: I no longer work for Topmonks, but it's quite recent. I have joined Satoshi Labs, who produce the Trezor hardware wallet, in the role as a Trezor ambassador. So right now I'm working. Still in the same field, of course. It's Bitcoin. It's mostly focused about my economic research, economic views on Bitcoin mostly. But I've moved on from Topmonks. But yeah, I can answer that question. That's a very good question. If somebody wants to act in this role as a Bitcoin researcher, analyst. And I used to also focus on Ethereum and DeFi before, but I moved on from that to just the focus on Bitcoin. And I guess you can approach Bitcoin from multiple viewpoints. You can either view it as a sort of exercise in game theory, because there are a lot of game theoretical aspects to Bitcoin. You can focus as an economist, as I have been doing for the past several years. Because Bitcoin is basically an emergent money. If you know, like Friedrich von Hayek or John Nash, or maybe even Mario Rothbard and Ludwig von Mises and the whole Austrian School of Economics, Bitcoin is very interesting from this perspective, to view Bitcoin as an emergent non-state global money. So that's interesting for sure. And you can, of course, be a developer. You can be a developer, let's say, contributing to core, to the consensus, to protocol, which is very advanced, or you can be a developer focused on the infrastructure, like on the wallets and, for example, BTC Pay Server, an open source point of sale solution, or you can be a developer focusing on like the further layers on top of Bitcoin, like Lightning Network. Then there's RGB, and then there is the sidechain Liquid. So depends on what your focus is already, I would say.
Yeah, thank you. Thank you for mentioning as well the Austrian School of Economy. We will head back to that quite soon. But let's head a little bit to the past for a while. I was wondering, what was the first time that you have realized that possibly blockchain as a technology or Bitcoin as such might be a game changer in the future? And when did you buy your first Bitcoin?
Yeah, me and a couple of friends have founded Ludwig von Mises Institute, Czech and Slovak, in 2010. And we've been having summer schools and seminars about various economics topics. And one of those topics was Bitcoin. And I think our first lecture on the summer school was maybe 2012 or something like that. I didn't pay as much attention to Bitcoin back then because I was still a gold bug, as they say. I've been focused on gold, mainly through the American Mises Institute and figures like Peter Schiff, which I still highly respect up till today, but he doesn't understand Bitcoin at all, which is kind of sad. But yeah, so we've been like looking at Bitcoin since maybe 2012, and I personally have started to research Bitcoin and write about it like in 2015, I think. Yeah, 2015. And I also did some first analysis for Satoshi Labs back then. And like 2016, 17, I started to take Bitcoin really seriously, like a lot of people. Yeah, so it's been like 5 or 6 years now for me. But I've been quite poor back then, so I didn't buy as much Bitcoin as I wished. But that's the usual story, you know. Everybody's too late to Bitcoin and bought too few Bitcoin, so it's normal.
Yeah, that's what I think as well. So back then, as you realized that it might be a future, and
Christoph, microphone.
Yeah, I lost you a bit.
sorry, I accidentally pressed it. So as we look at the current situation now, what is happening in the world with the economical situation and the crisis is going on, and as we look to America, where Biden is to print some more money, as we look to Turkey, where the price of their currency dropped significantly. And actually, interesting fact is that after that, many people started to search for Bitcoin. Do you believe that this crisis that is happening now might speed up the process of people transferring their funds to Bitcoin or some, let's say, other altcoins as well? And do you believe that people in the future might use Bitcoin or any other cryptocurrency on a daily basis, let's say to pay for groceries in a shop?
Yeah. I think the process has already started, like the process of people taking Bitcoin seriously, not just as a speculative asset, but as a sort of store of value. And what's also being talked about is like the Treasury reserve asset. In August 2020, there was an interesting piece of news that everybody heard of. That's the MicroStrategy Corporation. They started buying Bitcoin as a primary treasury reserve asset in August 2020. And that's not just some small company. It's one of the biggest business intelligence solutions companies in the world. It's traded on NASDAQ. And over like the past 10 months, they accumulated about 90,000 Bitcoin. It's, I think, $7 billion worth of Bitcoin right now. And what Michael Saylor, the CEO of MicroStrategy, said when he was acquiring Bitcoins for his corporation was that he no longer believes dollar is the store of value, and it no longer makes sense to hold on to so many dollars because the company is profitable, it has a good credit line and such. So, and he was looking around where should he park the money, and he saw that like bonds are in a bubble and they have zero or negative yields, or zero or negative real yields. They can have some nominal yields, but in the real terms, it's basically negative now. The stock market is quite in a bubble. The real estate is also seems like in a bubble. So everything seems to be in a bubble, and Bitcoin can also be perceived that it's in a bubble, or it can be perceived as like the purchasing power is reaccumulating from fiat into Bitcoin and into assets that are perceived as something that cannot be devalued, like the fiat currencies can. So I think this has started already, and Tesla with Elon Musk has followed as well, on top of MicroStrategy purchases. And as you mentioned, like Turkey, and there's also Nigeria, Venezuela, Iran, and all these countries that have heavily inflationary currencies. Yeah, Bitcoin seems to be popular in there because it makes sense for the people to adopt Bitcoin. It either makes sense for them to accumulate the dollars if they have. If they are able to get dollars in their country, which is not always the case. Like in Venezuela, I think it's quite hard. In Iran, due to sanctions, it's also quite hard. I think Nigeria has also quite strict foreign market policies. So Bitcoin is quite accessible in there, and it makes sense for the people to accumulate it as a store of value, as a protection against the inflation of their domestic currency. And when we talk about inflation, yeah, in Europe and the United States, we have like 2 or 3% nominal CPI inflation, which doesn't seem as high. I think it's still quite high, but countries like Nigeria or Iran have like 15 to 20% annual inflation, which is quite huge. And like Bitcoin's volatility isn't that serious a problem then if you are losing 20% of your purchasing power every year. Because over the long term, we can all see that Bitcoin is appreciating, and that's because of its monetary policy, which is very stable, very predictable, and it's basically immutable. It's not subject to any central government policies.
I see. And regarding that, as people are putting more and more trust to Bitcoin, and you mentioned earlier the Austrian School of Economy, and if we say that governments right now all around the world would use the concept of Austrian School of Economy, do you think that we would be able to somehow get rid of all the crises, and maybe blockchain would not be such a big topic right now?
Well, it's a great mental experiment. If the central bankers and ministries of finance, let's say, and prime ministers suddenly saw their error and started reading Mises and Hayek and wanted to do something about it. Because, I think the crisis, the depression and the unwinding of the debt, that's just the effect of what has already been done. If we had 50 years of interest rates that went lower and lower, and now we are at zero interest rates or somewhere even negative interest rates, and there's this huge debt burden. I don't know what's the national debt for United States, maybe 130% already. It jumped very high last year. So if everybody is up to their ears in debt, you cannot just suddenly wipe that away or pay that down. So and you cannot raise interest rates to 5 or 10% just to prevent further misallocation of capital, because if you were to do that, everybody would be bankrupt, basically. So it's quite hard to figure out what's the solution now that we are in this like deep depth hole. And now that the economies are addicted to cheap credit and bailouts and quantitative and qualitative easings and such. So like Bitcoin is here for anybody that wants to opt out of that system. And it can be a corporation like MicroStrategy. It can even be a national government. I think there we will see some national governments and central banks acquiring Bitcoin quite soon, and I think they are already doing it. Iran's central bank is definitely doing it. We know that, and it's also an opt-out solution for the individual. Everybody can, as we say, stack sats, save their wealth in Bitcoin over time. Don't speculate, don't trade. I'm not even a fan of altcoins. I think protecting your purchasing power through slowly saving in Bitcoin is the best bet for like the ordinary guy.
Mm-hmm. Thank you very much. As I realized, I forgot to tell you what kind of scheme we have prepared for you. There are 5 moderators, and each one has a specific topic for you. So this was my last question, and right now I am passing a word to Peter. So thank you very much for all your answers.
Thank you.
So good evening, and thanks, Christoph, for a word. So my first question is focused on inflation. Definition of money says that money should serve as a store of value, but it doesn't work that well, as if every year inflation cuts about 2 to 5% of our savings. So my question is, what do you think about inflation, and how do you think it will be affected by recent quantitative easing?
Yeah, thanks for the question. So like if I go back to Austrian economists, they sometimes point out that originally inflation was defined as the increase of the volume of money in circulation, let's say. And over the years and through some redefinitions, we started talking about inflation as the measured price inflation, not as like a monetary inflation, but the price inflation, which is measured through consumer price index, a selected basket of consumer goods and services. And what central banks are targeting is the CPI inflation rate of 2% usually. And that's what we've been having last maybe 2 to 3 years, like 2 to 3% inflation rate. But the monetary inflation has been actually much higher. For United States, I think the monetary inflation for 2020 was like 20 or 25%. Depends on what kind of monetary aggregate you look at. I think this is M2, not quite sure right now. So that's quite a lot of money that's created like out of thin air, basically. It's just based on new credit. And yeah, so where does this money go? Some of it falls down to the CPI basket, to the consumer price index, but a lot of this money stays in financial instruments, and that's where we have the speculative bubbles, like in stocks, real estate, bonds, and even cryptocurrencies. I think a lot of money is going to cryptocurrencies right now. I think like what's happening to Dogecoin right now is a perfect example of like cheap, stupid money just finding their way to like some kind of speculation. And yeah, I think like sound money, like money for the healthy economy, shouldn't be subject to central planning. Like for thousands of years, we had gold and silver working as money. Depends on where you look, but it slowly centered around gold and silver, but we had like tobacco money and rhinestones and such. And the good thing about gold and silver was governments or bankers couldn't create a lot of gold and silver for cheap on their own, but they could create like banknotes on top of it. And that's how we ended up with fractional reserve banking at first, and then pure fiat money that we have today. And I think Bitcoin, with its predictable monetary policy, where we know there's going to be just 21 million, already we have almost 19 million in circulation. That's like nicely predictable money. We know that this kind of money is not going to be inflationary. It's in terms of monetary inflation, it's going to be stable. In terms of price inflation, it's going to be deflationary. Bitcoin is deflationary money, and there's a lot of discussion, lots of articles and books and podcasts how the deflationary economy actually works, and well, whether it's healthy or not for the economy. I think it's good to have a slight deflation that reflects the increase in productivity. Yeah.
Okay, thank you for your answer. And as you have already mentioned, the market seems like it's in a bubble. And I would like to continue in this topic. It's a little over 1 year since the corona crisis began. And S&P 500 index is about 25% up from its pre-crisis peak. And this growth was surely supported by the monetary policy, which keeps interest rates low and uses quantitative easing to keep the economy running. So do you think that authorities are aware of potential risk of overpriced financial markets that could also attract more people to use DeFi projects?
I think they are aware of that. They have to be. If Fed is buying corporate bonds, this is very unprecedented, and they have to be aware like what the effect can be. But I guess, or it's not a guess, it's what they say. The risks would be much higher if they weren't doing that. I think that's like their perception, and that's the narrative. And from one point of view, it's understandable, because if you have an economy that's addicted to cheap credit, low interest rates, and basically a buyer of last resort, that's what Federal Reserve is now, basically, for some corporate debt. Then if you went away from this system, you would have a cleansing process. You would have a depression, lots of bankruptcies, and like the difference between mainstream economists and the establishment economists and the Austrian economists is in how do you perceive the depression? Like, is it something that has to be prevented at all costs, like even including running up inflation, running up debt and such? Or is it something that's necessary to happen sooner or later, because you have such huge misallocation of capital in the economy, the price system basically no longer works, and you have basically zombie companies that no longer basically produce more than they consume. That's like the Austrian point of view. Like, you should let the economy heal itself, and it doesn't have to be pretty for a short while, but if the capital that is currently misallocated is repriced and allocated for some other uses, then you will have a nice healthy growth afterwards. And we have many examples from history regarding that. Murray Rothbard wrote about early 1920s, where you had also a huge boom, like a speculative boom that was followed by a short but deep recession that was for like 6 months, and the central authorities didn't do anything about it back then. and the economy basically restarted and started on a healthy growth trajectory. Regarding DeFi, yeah, I think it's still quite small, but let me maybe take a look. What are the current numbers in DeFi pools? Yeah, oh, it grew $60 billion. That's nice. I'm a big skeptic when it comes to Ethereum DeFi because a lot of the projects are not really decentralized. They have these admin keys. They are VC backed, which doesn't also mean they are decentralized, and all the parts just are very hackable and prone to bugs. Like we have all these flash loan attacks and exploits and everything. So I know it's still early, and these things can be probably solved. First, I was excited by DeFi, by the Compound and Uniswap and these kind of projects. Later, when they introduced their own tokens, it kind of seemed shady for me. It kind of reminded me of the ICO bubble, and the yield farming bubble in I think September 2020 was pretty stupid. I think, but maybe something worthwhile will emerge from that space. Yeah.
Okay, and now a little back to stock markets. Do you expect some correlation between recently issued Coinbase stock and price of Bitcoin or a whole crypto market?
I don't think there's that much correlation. Maybe Bitcoin went up a little bit before the IPO, but Coinbase, like it wasn't nothing. It wasn't like buy the rumor sort of thing. Like everybody knew Coinbase is going to have a huge IPO. Like Bitcoin, you can always find some narrative why Bitcoin is rising or falling, and I don't think Coinbase was that. And somebody even asked me if like Dogecoin is rising because of Coinbase IPO, and of course not, because Dogecoin isn't even listed on Coinbase. So, you know, sometimes people think something is related because it's happening at the same time, but, you know, it's just noise. So I don't think there's that much correlation between Coinbase IPO and what's happening on the markets. Like the biggest impact in the last couple of days was this coal mine explosion or coal power plant explosion in China, which shut down like 30% of Bitcoin hash rate. That was a big news.
Okay, thank you for answers. And now let me pass words to Matěj.
Thanks.
So I would like to ask, because from your uploads on Parallelní Polis and Bitcoin channel, for example, I guess you consider Bitcoin as a golden standard among other cryptos, and like clear number one on the market, even in the future. So do you think this will going to last for generations, and why?
Yeah, I think it will, or let's say it has the best chance of succeeding among like the thousands of coins and tokens we have nowadays. Yeah, there are multiple reasons. The first one is probably the monetary policy and what's called the security budget, which basically means if the network is able to support itself by either inflation, new coins that are being emitted, or transaction fees. And for Bitcoin and many other cryptocurrencies, the inflation rate is falling over time. We have these halvings, and now Bitcoin miners get only 6.25 Bitcoin per block, and it's going to be smaller and smaller until it's zero. So we need transaction fees to support the network and to keep it decentralized. and for the miners to have their incentives not to cheat, not to do 51% attacks. And there are surprisingly small amount of coins networks that are able to do that are able to generate sufficient transaction fees. Bitcoin is one of them. Ethereum is the second. And then basically no other chain is able to generate transaction fees above like $1,000 per day, which was quite surprising for me when I looked at this data, because for example Monero, it's this truly anonymous cryptocurrency that is used on darknet markets and such, so it's quite used and has a place on the market. But Monero generates really just a couple of $100 in transaction fees per day. So it lives just off the inflation rate, which is unsustainable in the long term. I think Bitcoin's monetary policy is quite sustainable in this regard. And we can see it already. If like something's happening, if the hash rate fell down suddenly, like it did in the past couple of days, the transaction fees ran up really high, and that is what is healthy for the Bitcoin ecosystem. And the other part of the answer is sort of philosophical and economical, because what we actually need from these networks, and what I think is the most interesting thing and important thing we need, is the non-state money, the global non-state money, which has to be scarce in order to compete with fiat, and in order to incentivize people to basically adopt it, hold it, and save their wealth in it. And this is what Bitcoin already brought to the table. And because it has the largest Lindy effect, it's been here for the longest. It has the biggest hash rate, most independently run full nodes. It has a very conservative update policy. There's not much that altcoins can do in this regard to innovate, like in the scarcity kind of thing in the scarcity kind of quality of non-state money. So I think Bitcoin is still the main innovation here, because this is what we need. We need non-state money with predictable monetary policy, and its monetary policy is quite healthy compared to many altcoins.
Okay, thank you. And so you mentioned 51% attack. I also read about that in your book. It is especially possible with smaller networks when the miners are not initiative enough. So could you tell us something about it, and what networks are the most vulnerable?
Yeah. 51% attack is what happens when miners aren't basically rewarded enough. And if the reward for nefarious mining or malicious mining is higher than keeping in line, let's say. So 15% attack happened, for example, on Vertcoin, which is a good case study, what can go wrong with altcoins, because Vertcoin was just a small chain that was mineable on graphic cards, GPUs, and it had 1% of the hash rate of Ethereum and other larger chains. So if you don't have your own mining equipment that's usable just for the given network, and you share the mining equipment with other networks, you can be subject to attack as the crypto network. And 15% attack, basically what it means is when miner mines an alternative version of the blockchain history just for himself. He doesn't propagate these blocks to the network, and within these blocks he changes some of his transactions. And usually what the miner does is he sends some amount of the cryptocurrency to the exchange, to the cryptocurrency exchange. He sells it in there, let's say for Bitcoin, he withdraws the Bitcoin, and then he propagates the alternative history that he has mined in secret for himself. He has to have like 51% of the hash rate at least enabled to do that. And when he propagates these blocks that were previously hidden from the network, what he does is he tells the network he never made the deposit to the cryptocurrency exchange. So the exchange is scammed. He sold the coins on the exchange, and then he propagated an alternative history where he never deposited the coins on the exchange. So it's a fraud on the exchange, basically. And it's doable if you can gather a 51% hash rate at least for this attack, and if you have like sufficient certainty that you are going to be able to pull that off, and enough of the cryptocurrency to sell it to the exchange and such. Yeah, it's probably not going to happen on Ethereum. It definitely won't happen on Ethereum or larger chains.
Yeah, so on what chains did this happen?
It happened on Vertcoin, Ethereum Classic, and maybe some other chains. It doesn't happen as often as somebody could think, because there are a lot of chains, a lot of rentable hash rate, but it doesn't happen as often. Yeah,
it's very expensive, right?
Yeah, it can be quite expensive, and you have to have like several pieces in place. You have to own a sufficient amount of the currency that you want to scam the exchange with, and it has to have like sufficient value, and there has to be enough like hash rate to rent, and all of this has to be in place. I think like maybe Dogecoin is at risk at something like that, because suddenly some miner can have like a large amount of Dogecoin, and I'm not sure like what kind of how's the hash rate security on Dogecoin. Maybe if somebody rented a lot of hash rate, pointed it at Dogecoin, and tried to scam some exchange with it, this could be done. Yeah, but not sure if this is going to happen. But like altcoins after a heavy pump are subject to the risk of 51% attack.
Okay, thank you. So I pass the word to David.
Thanks for your word. It's gonna be me actually, not David. David will be the last. Good evening, everybody. To begin, you are also known for your siding with the opinions of Bitcoin maximalism. So could you please describe your path to it? And was it Bitcoin straight from the beginning, or it was more complicated?
Yeah, it was more complicated because I've been like, now I would say I was a shitcoiner. Previously, I would say I was a multicoiner or something like that, because I truly believed, for example, what Andreas Antonopoulos sometimes says. I don't know if he says it anymore. Like there's a multicoin future. Like you will have Bitcoin for savings as a store of value. You will have like some Litecoin, or I don't know what, like maybe Dogecoin even today, for fast transactions. You will have Ethereum or Polkadot for smart contracts and DeFi and such. And a lot of people believe that. I have stopped believing that after I have been trying to find some value in Ethereum and other chains for several years. And like what drove me to like straight Bitcoin? I've been a Bitcoiner like since day one, but not just Bitcoiner. I also tried to find some value in like the other coins. So it wasn't like I was first just like Ethereum guy and then I went over to Bitcoin. I was like always a Bitcoin guy trying to find some value in Ethereum. So what drove me to Bitcoin at last was involvement in some DeFi projects where I kind of lost the optimism and even like naivety about these projects being decentralized and being about something more than just pure speculation and pump and dumps. And yield farming in August, September 2020 basically did that for me, because previously DeFi was presented as something where like some solutions where you can have like financial products that don't need their own tokens. But suddenly all these projects started introducing their own tokens with the trend of like the yield farming, and these tokens were totally nonsensical, and it was utility tokens and ICO all over again, and this just sounded too stupid for me. I know these tokens can pump for months even. Some people can make a lot of money on that, but this is what was happening like in the ICO boom and like with CryptoKitties before, and it's just pure speculation without any long-term value, in my opinion. And yeah, then as I said previously, I took a look at like the economic reality of the security budgets, and I was surprised that like all the other coins besides Bitcoin and Ethereum are either centralized or heavily inflationary, just reliant on inflation, or they don't generate any substantial transaction fees on their own. So like if you take this like via negativa approach, you end up with Bitcoin and Ethereum in the end. And Ethereum, there's this problem. They are basically shutting down what they built over the last 6 years, because Ethereum 1.0 with proof of work is set for like depreciation, and Ethereum 2.0 with proof of stake and sharding and all this stuff is going to replace it. And this is based on completely new like consensus mechanisms, completely new logic. So this is like the Ethereum as we know it is basically losing all of its build up like credibility. So you end up only with Bitcoin later. And if you start to look into like Lightning Network on top of Bitcoin, when you start transacting with Lightning Network and you experience instant microtransactions for basically zero cost, you basically destroy a lot of like shitcoiner narratives around fast payments, because Bitcoin can do that with Bitcoin, with sats. Over the Lightning Network, and like the usability of Lightning Network has grown so much in recent years that it just doesn't matter anymore, like whether Litecoin or Dogecoin or Bitcoin Cash has faster blocks, because Lightning Network is much better than that.
I see. So you eventually got disappointed with all the other options, right?
Yeah, basically, I stopped maybe lying to myself. I was trying to find some value in these altcoins, and a lot of that was because I was holding those altcoins because I had, like they say, like heavy bags, and it's hard for you to look at this objectively if if you are betting on like some altcoin going to the moon, and it can happen, but it doesn't happen because of the fundamentals. Like Dogecoin doesn't have any development for several years. It's just a joke coin, and it's pumping because of Elon Musk's tweets, basically. And I think that's the case for many altcoins. And like if you let me maybe tell you one thing. If you are looking at altcoins, it's nice that they pump in like fiat currencies in dollars, but you always have to look at their price in Bitcoin, because altcoins are inherently much more risky than Bitcoin. So they should overperform Bitcoin in the long term. In the short term, they can overperform because they have their pumps, but in the long term, basically no coin overperforms Bitcoin, not even Ethereum. Ethereum had its historical high at 0.15 Bitcoin, and it was unable to reach that at all. Like Ethereum has been below 0.05 Bitcoin for almost 3 years now. So it's always important not to lie to yourself and like measure altcoins in Bitcoin, because this is what matters. You can have infinite dollars in the world, but you'll have just 21 million Bitcoin.
Yes, I totally understand, but a lot of those coins are in their beginnings right now, and they maybe could outperform the Bitcoin in the long run, I would say.
Yeah, sure, you can always say that. But if you take a look at 2017 altcoins, it's tragic, like their performance. And you know, how else are you going to evaluate it? Let me see. Let's wait. Yeah. Well, let's not go down the road like looking at the newest altcoins and measuring them. But for example, Polkadot, it's been falling compared to Bitcoin for some time now. It seems it had its high already. Well, it's risky. Like, I don't know the future for sure, but altcoins are definitely much riskier than Bitcoin. Their claims are usually not tested by time. They are not. They act more like startup equity. Yeah, and startup equity, it's nice. It can overperform a lot of things, but a lot of startups also fail. Like in their first year, like 90% of startups do fail. So if you are going to do that, if you are going to speculate on altcoins, you should keep that in mind, that don't just bet on one single altcoin. Well, I would say don't bet on any altcoin, but if you are still going to do that, maybe it's better to just go for some basket of altcoins. But then, you know, it's kind of hard to solve the security for these, because a lot of new altcoins aren't supported by hardware wallets, and you don't want to keep them on the exchange, because exchanges are always hacked and prone to various attacks and such. So it carries a lot of risk to speculate on altcoins, and it doesn't pay off over the long term, like if you take a look at 3 or 4 years.
Yeah, I understand. But what I am interested in is that Bitcoin maximalism comes with providing all functions of regular money, right? And nowadays, it's mainly about the store of value, I would say. Yeah. Maybe about some speculations still, but I can't really imagine a point where people would actually decide to start spending their Bitcoin, since the value with increasing usage of Bitcoin will be still rising. So
yeah, sure.
My question would be, could you tell me how you see the breaking point happening? And second part, whether it would be better if Bitcoin was specialized on store of value and let provide the other functions to other projects?
Yeah, good question. I believe store of value is the most important function of money, and it's the most important function of money if like a new kind of money is starting up, if it's emerging. Because if Bitcoin started just as a sort of better PayPal, like the previous projects were trying to do, like Liberty Reserve and eGold and such, like the pre-Bitcoin projects, you wouldn't have this strong drive to adoption, and it wouldn't solve the main problem with fiat money we have today, because fiat money is losing the function of the store of value. And yeah, maybe let's take a look at the second and third world, like in European Union, United States. Bitcoin is still like a nice thing to have, because our inflation is not that high. Like monetary inflation is high, CPI inflation not yet. So we don't actually perceive this problem of losing monetary or losing purchasing power of our savings that much. But if you are in Venezuela or Nigeria, Iran, and all these countries, and you lose like 15-20% per year on purchasing power, and you don't have an access to dollars, let's say, Bitcoin makes sense. And if you are already like maybe earning in Bitcoin, which a lot of people, for example, in Nigeria are able to do, because they speak English, they have good internet connection, and they engage in commerce with the global market. And Bitcoin is the easiest way how to receive the payment for their services. And then Bitcoin can also start playing the role of unit of exchange if you no longer hold fiat as such. If we in Europe and United States still have fiat income, it makes sense for us to spend fiat, because we know that fiat is going to devalue over the time. It's going to lose its purchasing power. So it's logical to spend fiat. And it's also logical to save in Bitcoin, because we know that Bitcoin over the long term is going to gain purchasing power compared to fiat with its inflationary policy. So it's completely natural what we are seeing now, that people are choosing to hodl Bitcoin, to save in it and spend fiat, because other way around, it's just economically nonsensical. Still, Bitcoin is pretty usable as a unit of exchange. And that's mostly via Lightning Network, which is still in its infancy. I can say that, but it's been moving by miles for the past years, and I'm still surprised how smooth the payments are. Like if you download, let's say, Phoenix Wallet or Wallet of Satoshi, you purchase some Satoshi in there. And then you can do global instant transactions for basically zero fee. That's amazing. And you can do that on top of Bitcoin. But I'm just repeating what I said before. Like if you used Litecoin for transactions, you have huge like transaction costs when you are moving through the networks. You have to somehow exchange between Bitcoin and Litecoin, so you are going to have two on-chain transactions, which basically doesn't make sense anymore. And you are going to experience like exchange rate risk. If you are going to hold Litecoin for some time, it can dump. Of course, it can also pump, but you then lose the store of value property of Bitcoin, and like the exchange costs in there. The transaction costs are, I think, too high. I highly recommend a book from Nick Bhatia. It's called Layered Money. It came out in January 21, Layered Money. And in there, he points out that in the history, money was always being developed in layers. Like you had gold, you had banknotes on top of that, you had treasury notes. On top of that, you had checks, accounts, money market accounts and such. But it was all like in 19th century, let's say, up till 1971, it was like this inverse monetary pyramid based on the gold. And it makes much more sense to build on top of Bitcoin the further layers for transactions and for asset emittance and such than on like parallel competing networks. Yeah.
Thank you. And quick last question. Do you at least acknowledge the importance of altcoins as competition to Bitcoin, so the customers has some other options which would push Bitcoin to improve further?
Yeah, sure. I think this is a good quality, and I respect, let's say, Monero and Zcash for their work on cryptography. Everybody respects that. The point of criticism is on like they're trying to be money, even if they don't acknowledge it. If you are going to have like a decentralized consensus mechanism with some monetary policy, that's trying to be money. So and the problem is the monetary policy isn't as good as Bitcoin, and doesn't seem to work in the long term. But yeah, there are many interesting things going on in all these networks, just not from like the monetary perspective, I would say.
Thank you very much. I will now pass the word on to David.
Yeah.
Thank you. My first question was about Lightning Network, and you already answered that, so I will move to my second question. So what are the biggest threats that can affect the Bitcoin? For example, last week there was a ban of Bitcoin in Turkey, a few weeks ago in India, for example, some regulations, or what is the worst scenario for Bitcoin? What could happen?
Yeah, this is a great topic always. So, like the biggest threat would be some undisclosed bug or undiscovered bug within the Bitcoin protocol. Something like that happened in, I guess, 2011, maybe 12, 13, 14, something like that. There was an inflation bug where I think 140 billion Bitcoins was suddenly mined. That was some kind of overflow bug where the integers basically overflowed and the miner was able to create more than 100 billion Bitcoin. If that were to happen today, that would be a huge problem, because back then the community was quite small. They could coordinate like depreciation of the clients and I think it was solved by what we would call hard fork now. But I would have to take a look in that. But I think it was basically a hard fork. And it would be very hard for us to do that today when the mining is much more decentralized than before. We have big pools, but there are a lot of miners in there. And like trying to pull something like that off nowadays would be very hard. So number one, it's a protocol bug. This is the most dangerous thing. And I actually found out like on Friday, there is still an overflow bug in Bitcoin protocol that's discovered but unresolved as yet. And it's going to be a problem in, I think, 2107 in this year. After this year, we are basically unable to mine further Bitcoin because there is a timestamp overflow bug. Yeah, maybe go check that out. I was surprised myself because I didn't know about it. So in the next 80 years, we are going to have to solve that. So we still have some bugs in Bitcoin protocol. Often cited are like the regulatory threats. Yeah, like you said, countries can ban Bitcoin, but that's usually like pretty stupid thing to do, because you cannot ban the Bitcoin protocol, you cannot ban the peer-to-peer exchange, you cannot ban things like BISC, which is a peer-to-peer exchange network. You cannot ban like running full nodes, downloading blockstream data from the satellite, and exchanging stuff through smartphones. You can, of course, shut down the so-called fiat on-ramps like exchanges, but then you just drive people to these peer-to-peer exchange networks. So like the more sophisticated countries like European Union and United States, they are not going to ban Bitcoin. They are going to regulate it. They are going to construct these walled gardens with exchanges and professional custodians. And they are going to impose strict KYC AML policies. This has basically all been happening for the past couple of years. And then perhaps they are going to monitor all of the outflows from the exchanges, because if you buy on an exchange, you submit your KYC data so they know who you are, and then you can follow the steps on the blockchain, so they are always able to know like who holds what. And maybe the regulators are also going to like prevent withdrawals from the exchanges altogether. I think this can happen as well, and I think somebody else already raised this idea. And then when this happens, when we have these walled gardens and exchanges hold most of the Bitcoin, you can easily impose some special taxes on Bitcoin, like a wealth tax that has been already discussed by the IRS in the United States, or you can partially or fully confiscate Bitcoins from the exchanges. And it may sound like a conspiracy theory now, but if governments run up big debts, if the monetary policy is like where it is, and if, for example, interest rates have to be raised in the future because inflation rate is going to be higher, then governments are going to look where to raise money besides debt. It is going to be more expensive in the future. And like Bitcoin or other cryptocurrencies on the exchanges are like the lowest hanging fruit, where you can confiscate them. And we have a nice precedence for that in the Executive Order 6102, which happened in 1933, where basically all of the gold that was held by American public was confiscated by the decree of the president. So this is like my biggest fear, that people are going to hold their Bitcoins on the exchanges. They are not listening how dangerous that is, and they can lose it either to attacks, hacks, or like confiscatory acts. Like further threats to Bitcoin, I don't think quantum computing is a threat, but I'm not like technically proficient to answer that more. But a lot of people are, and I've read some good answers on that. I don't think mining is such a threat. Like as the hash rate fell in China, what we see now is we are going to have a difficulty adjustment of about 35%, and then it's going to be like business as usual. That's how Bitcoin works. It's dynamic, and that's great. Yeah, so I think like KYC pressures and funneling Bitcoin into these like walled gardens, that's the biggest threat to Bitcoin.
Thank you for your answer. So probably my last question, so we can allow our classmates to ask you as well. You mentioned KYC. So do you think is it really important to buy Bitcoin without the KYC on some decentralized exchanges to keep the real sense of the Bitcoin as he was made?
Yeah, that's definitely the best practice. If you can purchase Bitcoin either peer-to-peer with someone like in person, it has its risks, that should be said. The person has to be reliable, and somebody has to know him beforehand and such, or through ATMs, which in many countries offer basically anonymous purchases, or through solutions like BISC or HODL HODL. These are like peer-to-peer decentralized exchanges without KYC. That's like the best approach, I would say. Because if you buy Bitcoin on the KYC exchange, the exchange knows who you are, how much you bought, and where you withdraw it to. So the exchange has the link between your public address and your identity, and then they can track like all the transactions you do from that point on. You can try to obfuscate the steps, like by making some kind of transactions, by doing coin join, like a mixing transaction. But you have at least the data point where you bought some Bitcoin in 2019 for price X and such. And maybe in the future, some tax office can knock on your door and ask, like, if you still hold on to it, and they have this like a record of the subsequent transactions, and it looks like you still hold on to it, and you are now subject to some special tax. So this can happen, I think. But yeah, still the biggest threat is keeping Bitcoins with some custodian. I think this is the lowest hanging fruit for some special tax and confiscation. If you can learn to work with peer-to-peer exchanges, and I think the UX is not as bad, that's the best practice.
Yeah, thank you. And the very last question, I saw you are working on a DCA bot for a regular buying of Bitcoin. So you are going to like launch it on a decentralized exchange or this like centralized like Coinbase or Binance?
Yeah, that's not me actually. Well, there's a project called DCA bot in a Czech Bitcoin community, but that's somebody else. What I'm working on is a project called Moresets. That is, yeah, DCA service. That's right. And we are still looking at ways like how to approach KYC/ML. I don't think we are going to be able to do it completely without KYC/ML. We may have some leeway to perform at least some purchases without KYC at first, but still, like, it's a service like for my mom or for my grandmother. Like they wouldn't be able to purchase on BISC. So it's a sort of service as a Cash App or Swan Bitcoin in United States. Yeah, to make things very easier for like an average guy. But anybody that is able to do peer-to-peer purchases to decentralized networks, I strongly urge them to use those services.
Yeah, thank you. So now I would like to pass the word to Christoph, and he can start the Q&A.
Yeah, thanks.
Okay, so right now we have some questions from our students. The first question that we have towards you is, what is the approach of the Czech government to cryptocurrencies? And do you think that they will try to impose rather a harsh restriction on using Bitcoin? And if I may, regarding that question, I would like to maybe extend this question. I read one article with you, and the name of the article is that America has realized that forbidding Bitcoin is stupid, and Europe should realize it. Either it's too late. So maybe can you try to combine it somehow?
Yeah, like Czech government has, or Czech regulatory bodies have quite an okay approach to cryptocurrencies. because of like the usual stuff like buying and selling and exchanging. That's not really regulated. It is only subject to AML regulation. So you don't have to have a license in Czech Republic to run an exchange, and that's interesting. What's problematic in Czech Republic is like the stance of banks and the evaluation of risk of banks when it comes to Bitcoin and cryptocurrencies, because like Czech banks usually don't like to see any kind of activity that is connected to cryptocurrencies because they deem it as too much of a risk. So they can just abruptly shut down your accounts, freeze your accounts, and just tell you to move on elsewhere. But there's basically not anywhere to move in Czech Republic because most, if not all, banks have this kind of approach to cryptocurrencies. And as I mentioned in the interview that you mentioned, in the United States, the banks have like much more pragmatic approach to cryptocurrencies because they have started offering accounts to businesses that are dealing with cryptocurrencies and Bitcoin without any problem if they can conform to some policies, to some regulations, and then it's no longer perceived as some kind of shady area, as it still is in Czech Republic. In the United States, the biggest pioneer in this regard is the Silvergate Bank. And sadly, in Europe or in Czech Republic, we don't have any kind of like banking pioneer that would try to understand that Bitcoin is nothing shady and you can do all kind of businesses with it without like any increased risk. As regards like the future of regulation, I don't think Czech Republic is going to change much in its regulatory approach because we are going to have a harmonization of European regulations, and this is MiCA, it's markets in cryptocurrencies or something like that. That is going to be adopted like in the next 2 or 3 years. So Czech regulatory bodies are just waiting for that to come into place, and they are not going to think any new regulations for themselves for the meantime.
Okay, thank you. So next question is, what do you think about DeFi, about Bitcoin? We can see first example already in operation. Sovereign is live example on RSK sidechain with DIX and lending.
Yeah, I'll have to check that out. Last time I looked at RSK, it was about a year ago. It seemed pretty dead, like there was no activity on that. But so if Sovereign is finally bringing something interesting to RSK, that would be good. I think mostly like DeFi projects on top of Bitcoin. There's Lightning markets, LN markets, which is a derivative trading on top of Lightning Network. Quite interesting. They have some not negligible volumes already. Then there's like my old project DBank, which is that's like a Schrödinger's project because it's half dead, half alive, and we never know which. And it seems it's going alive now, so maybe we'll see something emerge. Yeah, and we have RGB. I think RGB is going to be pretty interesting. It's like a red, green, blue. Like first it was a refreshment of the old like cored coins idea. Then it turned into something completely else, and it's basically a third layer on top of Bitcoin because it's on top of Lightning Network actually. So this is something worth following, the RGB project. And yeah, then we have like LNP-BP Standards Association, which are basically backing RGB. And yeah, there's a lot of interesting stuff that's emerging, but compared to Ethereum, DeFi, it's just first steps. I'm ready to admit that. And yeah, there are a lot of interesting things happening on Ethereum. But for example, I'm not sure how it's going to all work out with the transition to Ethereum 2.0, and I don't think I've ever seen a meaningful answer for that.
Okay, thank you. Next question from Christina. Do you personally invest in gold?
Not anymore. I used to, as I said, I used to be a gold bug. So I was interested in gold and silver coins, but I no longer see the value in the modern society. It still has like this long-term Lindy effect. People are still going to perceive it as a safe haven, but I think Bitcoin is a better store of value and better money than gold.
Okay. Next question is about Uniswap. Your opinion on Uniswap?
Yeah, I followed Uniswap since its beginnings, and it was pretty cool. And Hayden Adams seemed like a very decent like developer and like idea kind of guy. But I think Uniswap kind of lost the plot somewhere because Hayden Adams presented Uniswap as a basically fork of Bancor, which was like stripped down to the most like necessary primitives. And one of the points was Bancor had an ICO, had a token that was completely useless, and Uniswap didn't have that. And Uniswap didn't actually required any governance. And these are the two things where Hayden later made compromises on. He introduced the Uniswap token, and he started introducing like some kind of governance model, which seemed pretty strange to me. And I think that's maybe because of like venture capital started backing Uniswap, which is always nice to have more money to develop, but it comes with a cost, and the cost is you have to find some monetization model, some business model. And I think Uniswap kind of got kind of corrupted by that. But yeah, it's definitely one of the most like useful and meaningful projects on Ethereum DeFi. Yeah.
Okay, thank you. Christina is raising her hand. So Christina, go on if you want to ask something.
Yeah, hello. Thank you very much. I would like to ask you about CBDC and the.
Is it CBDC, like central bank digital currency?
Yeah, exactly. What do you think is the most probable scenario of adopting central banks, these kind of central decentralized currencies? And was the most probable influence of this kind of project on Western population?
Yeah, it's a good question. And I'm just going to do a research on that to understand it in more depth. But like the high level answer is, I think central banks will be finally able to circumvent commercial banks. And Nick Bhatia actually in Layered Money has a chapter on CBDCs where he explains this very nicely. Because like the monetary policy over the last 50 years, let's say, was based on setting the interbank interest rate or the repo rate, and all these rates. But when the rates are at zero, central bank kind of doesn't have the usual tool for performing the monetary policy. So that's a problem. And you cannot easily just put money into people's and institutions' accounts if you are a central bank nowadays. You can buy the debt. That's what the Fed is doing, and ECB and all these central banks. So you are kind of putting money in the accounts of corporations, but it's hard to do with people. So if you are going to, or you don't even have to put money into people's accounts. What China is now experimenting with is CBDC that has like an expiration date, like a digital yuan, where you have to spend it in a month, or there is going to be some demurrage, or it's going to lose some nominal value over time, which of course increases the velocity of money, and that's what you may want to do if you are a central bank and you want to have higher inflation and such. So CBDCs can allow central banks to do that, but I think it's just something born out of desperation, and the social engineering involved in something like that is like brutal. It's like Soviet Union style of central planning when it comes to money. And I think if this is introduced in like the Western world, the value of Bitcoin is going to be like much more clear for people. It's clear now for people in developing world with shitty currencies, not so clear for Western world. But if CBDCs are introduced in Western world with these kind of crazy stuff like depreciation over time or helicopter money, I think Bitcoin is going to be much more clear, like what the value of true store of value is.
Okay, thank you very much. It's nice to hear.
Thanks.
So there is another question. I'm not sure if you have already answered it, but this one is from Dominic. He's asking about your opinion about RSK sidechain and if it's possible to run scalable smart contracts on it. Does it have any potential in future?
Yeah, we have developed some kind of stuff for RSK with TopMonks, with like my previous employer. I was surprised how empty it is. It's basically a ghost town, like nothing goes on in there. But it was a year ago. Maybe now with this sovereign thing, it's going to be better. I don't think it's more scalable than current Ethereum, because it's basically based on the current Ethereum. And I think like the approach of sidechain, which takes like the smart contract architecture from Ethereum, is quite obsolete. I think what RGB is doing is much more interesting. It's still pretty much in its infancy, but it seems very, very interesting what RGB guys are doing. So you can check out Maxim Orlovsky. He's the head of RGB project. You can check out LNP-BP Association and Olga Ukolova. She's also part of the team, and they have like different talks and articles on that. It's quite technical for now. They are still missing like somebody who would explain it in some human terms, but it seems like this is the way to go for Bitcoin and smart contracts in the future.
Thank you. There's next question. I don't know from who it is, but he's asking, is it sufficient to back up Lightning Wallet with traditional recovery seed 12 to 24 words? Can we expect some changes for backups of off-chain or multi-signature wallets?
Yes. backing up Lightning channels is quite different. You have to write down the seed, that's right, but you also have to make the backup like of the channel itself. So yeah, but like every meaningful wallet should explain this. And if you are going to open some channels, you should be prompted to do these backups. Yeah, it's a different animal than on-chain working on Lightning, and still some people say it's kind of reckless because it's still in beta. The implementations are still kind of beta versions. Yeah, so you can use either your own Lightning nodes and open your own Lightning channels, and then you have to back them up properly, or you can use some kind of like UX-friendly sort of custodial solutions like a Wallet of Satoshi for smartphones. And if you have, if you hold just a couple thousand Satoshi in there, it doesn't matter if it's custodial. I would say you don't lose that much if it goes down. And yeah, if you use like wallets that have been around for a long time, trusting them with just like a few Satoshi is okay.
Thank you. Another question from Christina. What less risky possibilities does Bitcoin offer to companies apart from great store of value or investment?
Well, I would say that is the main point for them, to protect, like what Michael Saylor always says, he's the guy from MicroStrategy, is he wants to stop the bleeding, as he says, because if you hold cash reserves on your balance sheet, you are losing, and he says it's 20% per year, because he looks at the monetary inflation, because he sees that all the assets are rising. Yeah, and protecting the shareholder value, that's also one of his like main talking points, and I think he's been doing that pretty great lately. But that's basically it. It's like a treasury reserve policy. For some companies, yeah, I just remembered some report that I read. There's a report from Citi GPS. It's some global something, but it's from Citi, like the big international bank. It has like 100 pages. And it's about Bitcoin at the tipping point. That's how it's called. And they make the point that Bitcoin is going to be used as a trade facilitator in the future, as an international trade facilitator. And they point out, like for multi-party transactions, where multiple foreign currencies would have to be used, Bitcoin can become like the neutral money, neutral settlement network. And increasingly, Bitcoin is going to be adopted by global merchant and shipping companies as a store of value, as a reserve policy, but also as a like a settlement instrument for like cross-border transactions. That is quite an interesting perspective for me, and something that I haven't seen before that much. And it's interesting. It's coming from like this huge bank from Citi. It came out in, I think, February 21. It's quite recent.
Thank you. Probably one last question, we will see. Does it matter if we have it on exchange or not? If Binance or Coinbase gets hacked, the crypto bull run will end, right? What is your opinion on these big exchanges?
Yeah, well, it matters. As we say, not your coins, not your keys, not your coins. You always have to have your private keys under your exclusive control. If you are holding Bitcoin on Binance, you hold an IOU, like the Binance owes you something. It's a credit relationship. You don't hold it by yourself, so you are not a sovereign with your money. And this is what like Bitcoin is like the first thing Bitcoin allows you to do, to just hold on to your money and to your wealth without any counterparty risk. Yeah, and Binance and not just Binance, but all these big crypto exchanges were hacked in the past and can be hacked in the future. But it doesn't have to be the exchange as such. It can be your account. If you use a compromised email, don't set up a two-factor authorization, your account can be hacked and hackers can steal your money. Like, as I say, one of my fears in the future, like in the next 5 to 10 years, can be, or it can be maybe even sooner, it can be something sudden, is the confiscation from the exchanges. Like if the governments were to confiscate Bitcoin from people or impose some special tax, it would be done on the level of exchanges, because that's the easiest way how to do it. So I work for Trezor, but why I work there is because I have been using Trezor for many years and recommending Trezor a long time before I worked for the company. And I genuinely, truly think Trezor is the best hardware wallet. And you have two models. You can go with the cheaper one, but the level of security with hardware wallet, with any hardware wallet, is much higher than like holding it on some exchange or on some smartphone wallet and such. So if you are holding, I would say, more than $1,000 worth of Bitcoin or cryptocurrencies, you should have hardware wallet.
Perfect. Thank you very much for that. We really appreciate that you were able to spend your time here. Is there something that we can expect from you in the future? Perhaps some new book or some interesting project?
Yeah, I have this Bitcoin odluka peněz od státu. It's in Czech. It's going to be published in physical form by Brains company, who run Slushpool, the oldest mining pool. Yeah, maybe in the future it will be also in English. We'll see. And yeah, now I'm just focusing on working for Satoshi Labs as an ambassador. I'm going to write a lot of stuff in English for them. And I'm also launching soon Czech podcast focused on Bitcoin. I'm going to have, like, the first episode is an interview with Karel Kijovský, founder of General Bytes, the ATM company. The second one will be with Radim Kozub, founder of Blockchain Legal. That's the attorney office. And yeah, then it's going to go on like that, interviews with interesting guys from like Czech and Slovak Bitcoin and cryptocurrency space. So you can check that out. Yeah.
Perfect. Thank you very much. I'm sure everybody is looking into that. That's all from us. Thank you for your time.
Yeah.
And
maybe I'll just mention because I didn't say like how it's going to be called. I have my website Stekuj.cz. I don't know if it was shared. Yeah, Stekuj.cz. It's in basically a Czech website, and I'm sharing all of my outputs, all of my stuff in there. So the podcast and the book and such can be found on the site.
yeah, thank you. You don't have to worry. It's pretty easy to find.
Yeah.
So perfect.
Cool.
Thank you very much again.
All right. So thanks for the invitation, and have a nice evening. Bye.
You too. Thank you. Bye.
Bye.
Thank you. Bye.